Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliet Sarli. Sorry, we're a couple of minutes late coming on. I was just checking if my portfolio really is that hot. Not sure if you've seen our new promo. I hope you sign up to our newsletter, ausbiz.co/newsletter. But it does look like, having a look at the market, that our portfolios are looking much better than they were yesterday when we had that worst session in 2 months, rebounding and closing in on a record here on the ASX 200. The CBO 200, you can see there, is up by 0.8%, and the S&P ASX 200 up by almost 0.9%, 8,636. So sort of around 3 points off that all-time intraday high. Let's have a look at what we've been seeing in terms of the overall momentum, because it has been this Thursday turnaround, helped out, of course, by some momentum that we saw offshore. Also the fact that we've got iron soaring, iron ore climbing to a 2-month high, helping out a lot of the miners, and all of this coming amidst a payroll plunge as well. Of course, it's always a volatile series, the jobs data, but we saw only 2,000 jobs created in the month of June versus estimates of around 20,000, and that has seen the unemployment rate tick up to 4.3%. And of course, cast a little bit of a doubt over whether or not the RBA did the right thing by keeping rates on hold last week when it shocked so many in the market. I was talking to Phil O'Donoghue from Deutsche Bank. He was one that was calling for a rate cut. At one point, he was calling for a jumbo rate cut. And he was saying, well, that just pretty much prices in now that we should see a rate cut coming through in August. And just getting to that theme again about iron ore and the fact that it is hitting this 2-month high. That's a lot about encouragement here from China's pledge to reduce excess competition and outdated capacity, and that's despite the steel market's weakening demand outlook. So let's have a look at how that all played through into the iron ore players on a day when, okay, we are not going to be able to see them, unfortunately, but I can tell you that the materials sector as a whole is doing very well, up by about 0.4%. Let's then have a look at some of the tech players. We saw Block in particular do very well today. You've got WiseTech, Global, Xero also firmer today. And then looking at the banks, which also had a solid day. And again, defying the naysayers, CBA climbing back up 1.4% higher, $180.20. And perhaps some buying in ahead of reporting season 2 for those very much interested in the dividend. Let's have a look at what else was moving out there today. Car Group shares down 3%. Now, long-serving CEO Cameron McIntyre stepping down. He's going to be replaced by the CFO William Elliott, so a familiar face. But Car Group also forecasts net income to fall between $273 and $277 million for the full year. We also heard from Santos, shares up slightly. It did post a more than 2% drop in second quarter sales revenue, though, due to weak oil and gas prices. PointsBet finishing fairly flat at $1.19. It's advising shareholders to take no action to what it called an unsolicited takeover offer from Better Entertainment and focus instead on that one from the Japanese gaming giant Mixi. Citi, meanwhile, initiating coverage on Virgin Australia, but they prefer Qantas. Citi has a neutral rating on Virgin with a price target of $3.30. Virgin closed at $3.20. Meanwhile, it upgraded Qantas to a buy with a $12.20 price target, and you've seen Qantas rise by about 0.5% today to $11.02. Let's welcome to the COB our Thursday guest, Jimmy Jiang from GBA Capital. Great to see you with us, Jimmy. Let's start off with what we've seen with that jobs data, and I guess whether or not it puts paid to whether the RBA got it wrong last week.
Of course. Yeah, like you said, the unemployment rate rose to that 4.3%, contrary to the consensus was 4.1, which is, increase driven by about 34,000 more unemployed people at the moment. So what was really kind of interesting in the same report was that the total unemployed people was at 14.6 million, and then the participation rate edged up to about 67.1%. So what that means is that more people are entering the workforce, but not all of them are finding the jobs right away. And we also saw the underemployment rate rise slightly to 6%. While the employment to population ratio stayed around above 64%, the hours worked jumped 1.8% in June year-on-year, which is a strong 3.1% in May. So what this kind of all means is it's a bit of a mixed picture for the RBA. So we have one hand, more people are working and hours worked are up, which obviously signals there's an underlying strength in the labor market. But on the other hand, the uptick in unemployment and underemployment suggests that they are also softening as well. So it kind of likely reinforces probably another patient stance in August. But we don't believe that they will kind of rush into cutting rates unless we see a potentially sharper slowdown or inflation moving kind of lower faster than expected.
So what, Jimmy, you're saying they could hold again in August?
That is a big question. I think the market is still pricing in for a cut in August, but I think what we'll be pretty cautious with is holding is not out of the picture is probably what we think.
All right. Well, we did see real estate stocks leading the gains today, so perhaps a little bit of hope or estimates that cuts could be coming. What else did you see in terms of the overall momentum, and particularly after we saw the Nasdaq hit a record high overnight?
Yeah, look, as you said, Juliet, today's session was largely, boosted by the tech and the real estate. Over in the US, for example, the rebound was largely triggered by, obviously President Trump denying rumors that he might fire, Jerome Powell. Obviously, he said that the likelihood was very low. That reassured the markets about the Fed's independence. So, and obviously on top of that, the June producer price index came in flat, which was below expectation. Also eased that inflation concern as well. So I think the market is slowly, not ignoring, but slowly getting over the trade war, which is still very important for the market to focus on. So for example, over in the US, we are seeing a lot of big movements by the US companies manufacturing a lot of their facilities and investing into their facility to be onshore over in the US. Obviously, that's mainly due to the tariff threats by the Trump administration. So, for instance, we saw big movements from the pharmaceutical companies, bracing up for their 200% tariff by expanding inventories and investing heavily into the US-based production. So, as these US companies kind of reshoring their manufacturing due to the tariff and also some tax incentives as well, which obviously is kind of suggesting that the global supply chains are currently being restructured. So in Australia, in our kind of field, we need to kind of follow this quite closely because we are the major exporter of raw materials such as iron ore, like you said. We kind of need to reassess where the demand will come from here onwards.
I wanted to ask you as well about one stock that is on your radar, Jimmy, and very important as we look at mental health. So Medibank confirmed last month that customers suffering from PTSD will be able to access psychotherapy from a Perth biotech company. What is Emyria? What do you like about it?
Yeah, look, like you said, the mental health pandemic is creating an enormous financial strain on the insurance sector. So we particularly like a company called Emyria, ticker code is EMD, as the screen shows. And just going back to the industry report, we saw a lot of reports coming out from the major insurers, such as AIA, for example, that indicate that the mental health related claims are pushing those life insurers to the crisis point. And these claims are rising sharply and also kind of represent a significant cost burden across not just for the insurers, but for the healthcare providers to even business owners and in a small scale. So Emyria is bringing in a good solution to this problem. So they've developed therapies specifically designed to treat mental health conditions like PTSD in a very highly and effective way. And what's remarkable is that these therapies don't just kind of manage symptoms, but they also help patients to reintegrate into society, significantly reducing those long-term care costs for the third parties like insurance company. And as you mentioned, Juliet, Emyria secured a multi-year strategic funding agreement with Medibank, and obviously largest health insurers with about $4.2 million customers. It's a tipping point for Emyria to be able to be funded by Medibank with eligible customers to access the Emyria's PTSD program with no out-of-pocket cost for the patient. So it's a fantastic opportunity for Miriam.
Yeah, really interesting stuff, Jimmy. And, it's so important to address mental health and now looking at the investment thesis into it as well. Thanks for bringing that to us attention. Have a good rest of your day, Jimmy Jang there from GBA Capital. Getting back to stock specifics, Car Group was the stock of the day on the call. Nadine spoke to Henry Jennings from Marcus Today, Mark Moreland from Value 3.
I think for me at the moment, we do hold it in our growth portfolio. It's probably a hold on the back of that. The new CEO to be phased in, and this is not a sudden thing. Cameron has been there for some time. The new CEO is a relatively well-known commodity in the market, so I don't think that's really going to spook the market.
So we're showing the return now to be negative going forward. So I've got to say it's a sell.
All right, a good comeback on the market today. Let's have a look at some of the stocks which helped us get there. And I mentioned that Block in particular, or tech stocks, Jimmy was talking about that too, was a very solid performer today. Up by 5.3%. Also up by 5.3% was Nuix and Mesoblast, Auckland International, Ingenia on the top 5 as well. Lifestyle Communities, though, didn't have a good session. It was down by 4.4%. We touched on Car Group there, down by 3%. And then when you look at the likes of Lynas, remember that those rare earths players really shot up yesterday. So a little bit of giving back today, down 3%. In the small end of town today, Alterity Therapeutics had a very solid session, up by 19%. Now, as did Better, we touched on the fact that it's made another takeover there for PointsBet, up by some 10% to 30 cents, and Southern Cross Media having a good session as well. To the downside, in the small end of town, quite a few of the material players and some of the gold players as well. African Gold off by around 13%. Tonight, quite a bit of data out in the US, including retail sales for June. CBA tipping spending could lift by 0.4%. We've also got June import and export prices. Export prices tipped to fall by 0.1%. The Philadelphia Fed Manufacturing Index is also due, along with the July NAHB Housing Market Index. Tomorrow, though, Friday here, pretty light on in terms of what we're expecting. BHP will give an operational update, but there is no economic data. There is, though, a very busy day once again at AusBiz, but let's just have a look at where the local market has finished the session. The CIBO 200 there up by 0.8%. The S&P ASX 200 is up 77 points or 0.9% to 8,639. So I believe that could in fact be a fresh closing high, or at least matching the prior high. So rebounding after that worst session since May, and despite, or maybe in spite of, the unemployment rate rising to 4.3%, really firming up those odds at the RBA. Will cut rates next month, although interesting, Jimmy Jang from GBA Capital saying, look, maybe not, maybe they hold again. All right, we have a very busy day ahead tomorrow. Of course, all our regular chats, including in the 11 o'clock, we'll be speaking to Magenta Advisory about the week that was. Of course, Prime Minister Albanese's been in China this week. But also don't forget to join Nadine and I, or Nadine and me, I should say, on the last call from 3 p.m. Eastern. We've got a cracker of a lineup for guests for that tomorrow. We'll see you again from 9:45 a.m. Eastern.